What's up guys, Dan FX here, and in today's video we're going to be talking about market structure and how you can use market structure to trade so you don't enter the market at the wrong places and get stopped out and blame the market for that. So let's get to it. I'm going to be explaining the basics first for those of you who don't really know what market structure is. We know basically there are three types of market structure. We have the downtrend market structure, we have the sideways market structure when the market is just moving sideways, and we have an uptrend. So these are the three phases of market structure, right? So we have the downtrend, sideways movement, and an uptrend. The market can't do more than this, right? Now we're not going to be talking about the consolidation right now. We're going to be focusing on the trend because that's where the money is being made, on the trends. So when it comes to market structure, the trend is most likely your friend till the trend ends, right? So one problem most traders make is they don't really know when the trend is about to end, and that's really where they get messed up, right? So let's say we have a structure like this, right? And we know this is our high. This is the first high, the second high, third high. So this is the highest high, the lower high, and the lower high, and we also have the lower low, and possible lower low coming here, right? So this is basically the market structure. The lower highs makes it a downtrend, right? Now, if we know this is a downtrend, we should not be looking for buys in here, right? Even though they might sometimes give you some profit, but you should not be looking for buys at the lows. You should be looking for sells at the highs. This is where you should be looking for sales, here and here. These three areas are where you should be looking for sales, right? And you should not be looking for trades in the middle, because this is what a lot of traders make. The mistake that most of them make is entering trades in the middle. When you enter trades at the middle, you get stopped out by different market behaviors like chop or wicks, because most of the time they want to consolidate, they most likely consolidate at the middle of the trend. They won't consolidate at the high or at the low, right? Now, how do we know if this is actually going to be the high? How we know that is each day. We have 5 trading days in a week, right? So we have Monday to Friday. Each day has a high, each day has a low, right? So let's say this is Monday, this is Tuesday, and this is Wednesday, right? So Monday, this will be the highest points for Monday. So that will be the high, and then they drop and reverse, and then coming into Tuesday, they haven't formed the high yet. You wait for them to form the high, so that will be your high. Your job is to find a trade to sell in line with this trend at the highest point on Tuesday, on that day, right? And same thing on Wednesday till the trend reverses. And same thing goes for the uptrend. So just invert this to the other way, and it's the same thing for the uptrend, right? And now in my channel, I know I teach that after 3 days of the market trending in one direction, you most likely get a reversal. So let's say we have an M formation here. So after 3 days or 3 levels, which is we have 1, 2, and 3, well, we're going to be looking for a reversal. So now, knowing this, you can be prepared for a reversal to happen. And most likely what usually happens is you have, just the way you have an M formation here, you will have a W formation here too, like this, right? And most of the time it will look like a head and shoulders, where this is the shoulder, this is the head, and this is the second shoulder, and then they reverse and begin to break structure. All right, now for each day to be considered a level or a complete day, it has to take out the previous day's low. So that will be break of structure, right? So when they take out this low, so this high is confirmed. This high has been confirmed that yes, this is the high. So it breaks the low and then continues down. So now this is the low, this is the lower high, and then here you have your lower low, and then your lower high. But for this to be confirmed, this low has to be broken. So the moment they break this low, then this is confirmed. So that gives you 1 to 3 days, and then you have a W formation, and then you most likely have the same thing and the other way around. Inside the market structure, there's what they call the daily structure. So this is the structure of the markets on a daily basis, where you have consolidation and you have your breakouts, have an M, and then you have a reversal back into consolidation. I've explained this in my previous video, so be sure to check that out. Now, in this whole cycle, this is a 24-hour cycle in a day. This is what happens in a day. You most likely have 3 levels of push in a day, right? So this will be 1, 2, 3 before they'll form a micro W formation and go back into consolidation. Now, that happens because the market is fractal in nature, meaning what happens on a macro perspective also happens on a micro perspective, right? So if in a week we have something like this, that means in a day too, you most likely have this same pattern, right? So in a day, you have consolidation breakouts, M formation, you have push 1, push 2, push 3, and then they'll end the day in consolidation like this. This happens every day and also happens per week, right? So if we break this down into a weekly cycle, so this will be Monday, this will be Tuesday, Wednesday, Thursday, Friday, right? Now, that same structure also goes into this pattern. So when you have an M formation like this, and you have the market reverse, so now the downtrend is beginning to come up, right? And you expect a lower high. Now, inside this lower high, what you usually have to form this lower high, how you can catch this trade right up here is using the structure I just showed you now, the daily structure. Because most of the time, you have the market come back and consolidate like this. Once they consolidate like this, you can expect them to break to the upside, give you an information and drop, and begin the consolidation again for the next day. So now this is your high, and this is your, let me change the color of this, and this is your lower high, right? And then they'll do the same thing like this. So basically, this is your high, your lower high, your lower low, your lower high, your lower low, right? So, and you expect a lower high. Now, if you count this, and this is 1, 2, 3, and you're looking at the charts at that moment, and you see they form this low after 3 pushes or after 3 days of market trending in one direction, and they form this low like this and begin to consolidate. What you should be looking for is for the market to go back down to this area for you to take a buy in here, put your stop loss below the low, and take this up, and you can expect them to do the same cycle again, right? So this is basically this, like this and like this, but broken down into a more easier way. So all right, so let me just show you guys a couple of examples here on the chart. So here we have a big fat M formation here like this. We have an M formation like this, right? It's kind of messy, but it's an M formation. And in fact, this was the trade I took on Tuesday. Yeah, today is Wednesday, so I took this trade on Tuesday. So after the M formation, after I saw this big fat M formation, after they were trending up for a couple of days, if you count the levels, this would be level 1, level 2, like this, and level 3. All right, so this would be your first level, second level, third level. So You see how they push out. This is the first push, the second push, then they consolidate all the way in here, and then they make the third push out. All right, so that's what I saw. So I saw this big fat M formation, and after this move down, it's easier to see on the 1 hour chart. So big fat M formation. After this move down, what I basically expected is, because they went back into consolidation, as you can see here, right? So they went back into consolidation. If you go back to the 15-minute time frame, so they went back into consolidation. You can draw the consolidation like this, or you can just draw only the one during Asian session like this. So what I was basically expecting was, this was what I was expecting, for them to consolidate, give me a pattern like this, and drop and end the day like this. So I was gonna be looking for sales here, and that's exactly what they gave me. So they consolidated for about 8 hours. Yeah, 8 hours. Then coming into the ending of the session. So this is the beginning of London. This pink box here, as the beginning of London session. So coming into the beginning of London session, they break out. They come back down. They give me an M formation like this. If we change it to a line chart, you can see that's a very beautiful M formation. And I basically entered the trade on the second leg here, on the candlestick pattern that I saw. This is like a hammer or a star pattern, whatever you want to call this. I've explained this, how to catch trades like this, on my channel, so be sure to check those videos out. And I basically wait for a 1 to 2 risk to reward. I wasn't looking for much. I could have gone for probably 1 to 4 or 1 to 5 risk to reward on this, for them to break this previous low, but I was okay with the 1 to 2, right? So, and then they went down like this, and this was how many pips? This was about 130 pips, right, to the low. And if you turn this to a line chart, you can see like they give a very messy W formation like this, and then they went back and ended the day in consolidation. So consolidate, break out, break down, end the day in consolidation. And remember, I told you to usually give you 3 pushes, right? So this is the first push, then they consolidated, the second push, then they consolidated, the third push, and then they reverse off of that level. If you go to the previous day, the same thing. This was the high they set. The first push, they consolidate. Second push, they consolidate. Third push, give you a W formation, and back into consolidation. So this is how the market structure is aligned in the forex markets. And you can see even today they do the same thing, right? Consolidates, hit breakout down, and reverse back up, and now they're coming back down to end the day in consolidation, right? So that's basically what it is. So tomorrow, I think what I'm going to be looking for tomorrow is for them to continue this downtrend. So because we have the first day and we have the second day. Today is the third day, but they haven't really broken this low, so I need them to break this low. So we're basically in this range here. If they continue in this range, so that's like consolidation. So I'm going to be looking for sales. So I can most likely expect them to come back here, maybe come down like this, consolidate for a while till tomorrow, go back to this high, maybe give you an M formation. So this would be like a big fat M formation like this to take this down, maybe here or here. Consider subscribing to the channel. I post videos like this, teaching you how to trade, my strategy, how to trade like the banks, how to trade with the institutions, right? So subscribe to the channel, and I'll see you on the next one.